Frank, I'm scared the property market's going to crash. I'm shitting myself. The world is falling apart. How are you?
Yeah, good. It is going to crash.
It is going to crash.
No.
So if you're listening to this, pull all your property out, sell it, and put it on crypto.
Don't do that.
Don't do that.
Do not do that.
Foreign investors are starting to pull out, or not even starting to pull out. They're pulling back. I want to discuss today what that means for property investors out there, and I want to discuss if there's going to be a pullback, if there's going to be problems with property. Is Australia now not going to continue what it's done over the last 100 years and now fall off a cliff? That's what I want to talk about today. Welcome again. You ready to rock and roll? We still haven't got this light set up, so we're in the new podcast room.
We'll have it all sorted soon, I believe.
I've heard that a few times.
I think more importantly, let's talk about what's going on, what's the agenda is on about today.
Yep. So property, and obviously foreign investors. There's a lot of, we can call it BS. We've spoken about this before. A lot of things that are happening right now, which is making it harder for foreign investors to come and invest in the country, right? What is that actually going to do, in your opinion, to the property market? Should people be concerned? Should people be excited? That's what I want to talk about today.
Yep.
Let's do it.
Awesome. So I guess if you are listening or watching this podcast, you might hear that and you might think that's a great thing that's happening at the moment, where foreign investors aren't buying in or getting into the market, and there's been a massive reduction, which there has been.
Yep.
I think the biggest drop-off is about $1.3 billion drop-off of not, that they've reduced in purchasing property in Australia. So
since when? What's those numbers?
In the last 12 months.
In the last 12 months, $1.3 billion bucks.
Yeah. So there has been a massive drop-off. People will look at it and go, that's awesome. That means Australians can get into the market. Well, not necessarily, because a lot of the big, heavy investors from foreign investors are not just buying homes or apartments. They're buying big property sites and developing, and it's either new estates or it's either, buying a piece of land somewhere close by and putting, high-rise apartment and creating more housing for Australians.
Yep.
The thing is, when you look at overseas foreigners, investors, they have capital, they have money. There is more billionaires in other countries than Australia, a lot more. And a lot of people in China, the States, and other parts around the world, they, like I said, they've got a massive amount of money. So with this, actually can help the property prices with reducing it, or putting putting an oversupply onto the market. Because if you have a look, if there's more property coming onto the market and there's not enough of that, or too much of that supply, it's going to outstrip the demand, and then prices won't be as aggressive.
Yep.
But in this case, they're making it harder for foreign investors to invest in Australia. They've put increase on surcharges on when it comes to stamp duty and when it comes to land tax.
Yep.
And we'll touch on that in a little bit of what that looks like for a foreign investor. Yep. So making it very difficult at the moment.
Okay. Can we actually touch on that specifically? What are the red tape or the things that are been put in place by the Australian government, which is actually causing a slowdown, or $1.2 billion, which is a lot of fucking money, $1.2 billion from the last 12 months in essentially a cut, right? What's actually happened? What are those red tapes?
So they've put a stamp duty for different states and territories. Stamp duty is much more significant. So it can range from 4% increase on top of whatever the stamp duty is in that state to about 8%.
Wow.
Victoria's the highest.
Wow.
So it's about 8%.
Of course, Victoria's the worst.
New South Wales, you buy a $1.5 million property, okay, you're going to have to pay about $67K in stamp duty. If you're a foreign investor, you're going to have to pay an extra, I'll do my numbers, I think it's around $120,000, $130,000 as stamp duty.
Yeah.
Okay, and then if you got land tax on top of that, land tax, once again, it's around 2 to 4%, I think, roughly, for different states and territories.
Yeah, and I think what's super important there, it's, again, because there's different views on this, right? We're talking purely from an investment point of view, okay? What people need to understand, exactly what you said before, these guys have money. Don't think that these guys now are not putting their money to use in other countries. All this does is it goes, cool, Australia, X. Let's go into Singapore. Let's go into Dubai. Let's go into other countries and let's put our wealth into there. I'd be super, super, super interested. I'd love someone to sit here who's got actual disagree with you and go, no, this is a really, really awesome move. I'd love to see a debate on that. Maybe we could get that up. But okay, let's keep talking. So those are the things. Land tax and stamp duty is essentially right. So it's almost like there's a levy now on investors from across who are not in Australia. What is that going to cause? What is that actually going to happen if this continues?
Well, if you look at, they've done this since COVID.
Okay.
So if I ask you and I go, okay, this is what they've done since COVID, and we've had a massive drop off with foreign investors. What's, from your experience, what's happened in the property market in the last 5 years in Australia?
Most regions have gone absolutely ballistic.
And so if there was more investments in some of these regions where they could build more properties, would that help where prices might not be so aggressive and increasing in value significantly like what we've seen?
Yeah. Well, I mean, you think about it very logically. There's 100 properties and there's 200 people. And all those 200 people want those 100 properties. Very, very, very simple. It's investing 101. Supply is low, demand is high. What happens? The property or the price of that investment must go higher. If there's 200 properties and everyone has a property each, I know that's not as simple as that, supply demand is almost is balanced, we'd say. Now, there's not just that has caused over the last 5 years the property prices go up. There's a whole bunch of things, but I definitely think that not allowing foreign investors coming in and building new estates, or foreign investors building new apartments, or foreign investors, buying assets has helped the cause of property prices going crazy.
Yeah, and it's correct. There's a lot to it when it comes to property. It's not just one thing.
Of course.
And the problem is if you've got an established area, of course, an established area that has a limited amount of stock is always going to be a place long term is going to do quite well. For example, you go to, if it's Camberwell, Brunswick, you go to Double Bay, there's only a limited amount of real estate. So, of course, those prices will always do well. And, of course, if they buy houses and knock down them and build high-rise apartments, fantastic. But, of course, the housing market will always kind of do well in the established areas. But when you look at it surrounding locations around the country, you look at WA, Queensland and South Australia, there's a need for housing and there's not enough housing. And so there's a need for rental properties, not enough rental properties. We had rental properties decrease by 50% nearly in the space of 5 years, which is crazy and ludicrous. And then you start seeing like rentals are going up ballistic with, rental prices. For example, I moved out of my rental property a couple of weeks ago. There was 50 groups that came through the rental through the rental, and there was 30 applications on that property. A lot of those applications were over the asking of what the rental is. If there was more of those properties in that market, you probably wouldn't have that issue.
So you've got to ask the question, because I understand it, right, and I want to dig into this, right, why the Australian government, who's a very intelligent corporation, we won't go too deep into it, right, why they have actually then decided to go, well, cool, we know that there's a rental crisis, which I think is actually probably more important than the housing crisis. I think as a country, we would probably rather we solve the rental crisis, because people need to live. People need to live in a property, whether they're renting or whether they're owning a home, right? We need to solve that rental crisis a lot quicker than we need to solve the prices growing. Yeah,
and I think that's because you are immigrating a lot of overseas migrants to Australia.
Yep.
Which the government is doing, and we need that not just because we need that for jobs, we need that for certain industries that I guess a lot of Australians don't want to work in. That's where immigration comes in. But if 70% of people that come from overseas migrate to Australia, they can't afford to buy a home, they need a rent. So your point there is like, yeah, you're bang on the money. We need more rental properties, and we probably need to solve that problem first.
But let's make it hard for foreign investors to go out and actually build these assets and come in and look at Australia as actual, a place for investment to go and do their business in. I mean, I do understand from a price growth perspective, right? There's foreign investors coming in and they're pushing us. I don't want to say us Australian. They're pushing Australian buyers out of the market, right? Like it's they can come in. They've got more money to play with potentially, and they are going. They're also causing prices to go up. I'm just trying to, why I'm kind of leading to this, I'm trying to understand why a decision like this is being made and why they will continue with this decision to make it hard. And I want you to take off the hat and kind of be in the second boat to go, cool, well, here are the benefits of doing this. Because you can't just be, there needs to be, there's pros and cons with both things that you're saying. There's going to be negatives if you go, no, don't put any restrictions on any foreign investors. There's going to be negatives with that. One, well, price growth will probably go up in these established areas which desirable areas, the Double Bay, the Camberwells that you mentioned, nice place of the city in Adelaide or whatever have you, right? So what are the negatives with allowing foreign investors to come in?
It's a good question, and I think it is. There's good and there's positive and negative with anything you do.
Of course,
there's never it's always going to be positive.
McDonald's is good, but it also is not good for your health. Yeah. It's a beautiful meal. Of course, nice double Big Mac.
Of course. So I guess with the foreign investors coming in, what are the negatives?
Mm-hmm.
Negatives are, of course, if they start buying up a lot of real estate, that it's not allowing Australians to get into the market and being able to, buy a home or invest in property.
Yep.
That's one, negative, and they'll be selling it to, to foreign investors. There's another thing where if they are buying certain types of, land banking and buying sort of types of assets where, if you're buying a whole bunch of an estate and they're not doing anything with it, it's not productive. That does happen.
Yep.
And they've actually put a tax on that where if the land is vacant for a certain period, or if it's vacant land, they're going to tax you more on that.
I can actually understand that. I actually agree with that.
I agree with that. I think that needs to be, you can't just have these type of people coming in or foreigners coming in, buying these types of properties, doing nothing with them and not being productive. So there needs to be
storing their cash or storing their money.
There needs to be some sort of requirement where if you want to buy property in Australia, you need to do something with it productively.
Cool.
And you can't just be sitting there vacantly not doing anything.
Cool.
So I believe that they need to have something like that, and they do. And I think they could be more stringent on that and not stringent on getting into the market.
Yep.
Because we do need some sort of we need incentives to do something in Australia, where at the moment there's no incentives for builders, local private investors to invest in the country and build more housing.
And the government's not putting their hand up. So I think that's the important thing for the viewer. You ran that 2% of all residential properties in Australia are government owned. Is it 2%?
No. So at the moment, and I've got the stats here, we'll touch on it in a second.
Yeah.
We need to build 250,000 properties a year for the next 5 years.
Yep.
Okay. I think it's 5 to 6 years to keep up with the immigration coming in.
Yep.
Okay. They're building well below that. And so I've got the stats here. Every single year it's reducing of how many, behind that target of what we need to hit.
I think 160 or something like that we built last year.
Yes, 170. But the crazy thing is, out of those properties, the 250,000 properties that they need to build, or the current properties, I should say, that they've built around that 170 in the previous year, 1% of them are being built by the public sector, the government sector.
Okay.
And majority of them are being built by private sector, which is can be builders, big development companies, mum and dad investors.
Foreign investors. Yeah. So I think this is where the problem lies. That's 1%. Like that, the problem is actually getting worse. We're already in a rental crisis. You don't need to be a genius to say, well, hang on, they built 170 now. They're still putting taxes on the people and they're not making it easier for the people to actually go and build. And when I say for the people, for the private sector, do you think that it's going to change? Do you think something has to change? Something has to change, or there's going to be homelessness, in 5 years? And I don't say that to scare people, but
America's in that position.
That's right.
They're in actually same position with the building crisis that we're in.
Gotcha.
They're in this exact same boat.
Gotcha.
So, yes, and I think they need to make a change, but when do they make a change?
When shit is too late.
Exactly. So I think that's what's going to happen. It's just
kicking the can down the road.
I think the things they need to do as well, when you bring in people from different countries and they're migrating to Australia, that's awesome. But if you keep putting them into certain locations, like at the moment, they're bringing a lot of people to Melbourne. Majority of them come to Melbourne, not just Melbourne, of course, Sydney and other parts. But I think if you put certain areas that they need to go to, or they can't just go, everyone come to Melbourne, because that's then, of course, that's going to affect the housing market there as well. It's going to affect the rental market as well. So maybe we've got to move them into maybe Adelaide, or Adelaide's probably market somewhere, but maybe certain other locations, regional towns,
incentivize people to be moving into these different regions.
If you look at the States, I think it's awesome to see that they've got these massive, towns. Like you go to Florida, you go to Miami, you go to California, you go to, Seattle. They got these huge, huge cities and different cities that are just, they're booming, and everyone wants to go to these places, and the population's huge in those areas, but not just that. Of course, their population's different to us, but majority of people that live in Australia, majority of Melbourne and Sydney. When you look at the population, very few people want to live other parts around Australia. But we can make it more attractive, make it more like more amenities, more, there's more hospitality and things like that in these other areas. It can attract people to live there.
Of course.
And so I think when you keep doing the same thing over and over again, and you look at Melbourne being one of the best livable cities in the country, and Sydney's up there as well, it doesn't help with that, because you're not wanting to help that issue to spread the load around, or the love around other parts around Australia.
I mean, I agree with that, but people are going to live where people want to live, right? So again, if you just take a bit of foreshadow with it, or you just look forward 5-6 years, the problem's going to be well, hang on, Melbourne's too dense.
But what happens if you made 5 Melbournes or 6 Melbournes?
Yeah, I know, I understand that, but also you're the government tomorrow, right? Or you're in charge of solving this issue. That's not an easy process.
Of course, it's like
that's a timely thing to go out and say turn
100%.
Perth into Melbourne. Dare I say, I'd probably rather be living in Perth if it wasn't for my family. I think Perth's beautiful. I think Adelaide's beautiful. I think Queensland. Like if you go and live in Queensland or live in Sunshine Coast, vast majority of people aren't going to want to say, oh yeah, let's come and move to Melbourne, right? It's bloody cold. Yeah, there's a bit maybe nicer coffee, and we move a bit quicker in pace, but apart from that, the actual lifestyle is pretty nice. But okay, cool. So what's going to happen then?
Well, with where we're heading, I do believe with the immigration that's coming in, I look at the housing supply and the shortage at the moment, especially in Victoria and other, if New South Wales and parts of Tassie as well. I do believe these are going to be the markets to invest in the next 5 years.
Why?
Just because there's not enough property, and they are attractive cities and states for certain people that are coming to Australia. But not just that, there's a lot of jobs, there's a lot of things happening.
Yep.
And it's attracting people to move from other parts around Australia into these states here.
Yep.
So if you look at what's going on and where the money's getting spent and where the jobs are getting created, and then you look at the housing supply, there is a massive shortage.
Okay.
And so they can't keep up with that.
Gotcha.
And the crazy thing is, if we want to even touch on what the builders look like, or how many builders are in Australia and what's going on,
I'd love to. Yeah, if you've got those numbers,
is pretty scary when we look at this. Now I'm just going to get this up because I think this is important to make sure we can just talk about how many builders have gone bust. Okay, so 2022, 2023, 2,100 builders roughly went to liquidation. 2023, 2024, 2,800 plus builders or construction companies went into liquidation again.
Holy shit.
2024, 2025, 2,600.
That's a drop off.
So you look at that. I got a friend. I got a fair few friends that are in construction, and I know their companies have gone into liquidation. Big companies I'm talking, where they have 50, 60, 70 workers.
Yeah.
If that keeps happening and happening and happening, which it is, you're not going to build enough properties or keep up with the supply or the supply they need for the demand.
Well, you're not already.
You're not already. And so with that, the funny thing is they want to build all these properties. We need to build 250,000 properties per year. The government is saying they build 1% of that, and we're left it all up to the public sector, the private sector.
Yeah, but so because surely, and again, I want you to put your the government hat on, or not even the government hat, the government hat who's responsible for housing. You can't go around just getting people out of liquidation, right? That's my view. People going through liquidation because of, a magnitude of things, potentially bad business operating or whatever have you, right?
It can be as well because the materials have gone out of whack and
Correct.
they've increased by 40-50%.
So
margins.
surely you're not saying, okay, well, the government's responsible for getting these people out of this liquidation period or out of it?
No, not at all.
Okay.
Not at all.
What are you saying there?
Or if you've got all these builders going bust, and 99% of the new builds and the new dwellings that are coming into Australia is from the private sector, don't put a target out there of we need to build 250,000 properties, but you're not doing anything about it.
Well, that's government 101, right? That could just be a selling point, right? So we know the target doesn't really mean shit, in my opinion.
Oh, if it meant shit to them, they would do something.
100%, 110%. It does not mean any more than what it is, to be elected. But we don't need to talk specifically about that. What's going to happen then, though? What is actually going to happen?
Or what's happened for the last 20, 30 years where there's locations that will do well at certain times and there's locations that won't do well. So for the last 3-4 years, you've looked at Queensland, WA and South Australia, they've done extremely well and you've seen prices grow by 50 to 100% in some of these markets,
probably
if not more.
Yeah.
Yeah. And there's been a massive shortage of houses in that area, in these areas. And then the tide's going to change and it's going to move into other states and territories like it is today. Northern Territory is doing extremely well.
Yep.
Enough housing there and that's going to take off as well. Same with Victoria, same with Tassie, same with New South Wales. I do believe with some of the markets we're buying in. And I look at there's a massive housing shortage, not enough building approvals at all. And that's reducing significantly. I did get numbers. I did get data. Some locations. There was that many locations. I didn't put too many in here. Otherwise, we'll be rattling off probably 100 locations where there's not enough properties or not enough builds coming in.
Can we talk about some of them?
Yeah, we will. I want to touch on them in a sec. But I think with this, if we just look at these numbers of building approvals. Oh, sorry, not building approvals, of how many properties they've built. 2023, 2024. They built approximately 170,000 dwellings.
Yep.
Okay. 60,000 short of what they needed to hit for that target for that year. Okay.
Yep.
2024, 2025, 150,000 homes. So less than the previous year. 90,000 dwellings below what they need to hit. And then, I can keep going, but it's...
No, keep going. I want to hear this.
If we look here, I've broken it down to July 2024.
Okay.
They need to hit 60,000 properties. They only done 44,000 properties. And then that's in June 2024. And then in March 2024 as well, the previous quarter, 41 properties they need to hit. They're about 20,000 properties short. So as we can see, it just keeps reducing amount of properties. And that of course certain locations that we need they need to be in, of course, and it's just not happening. So
from a research perspective, and this is actually curiosity, I actually don't know this answer. Do you look at this when you look at a location, and obviously you look at the amount of new dwellings that have come on previously, you don't tie that back to the government's goals of 250,000. Like that doesn't even come into the picture. Obviously you look at how many properties are coming onto the market in the last year. That's one of the metrics. Do you want to touch on that?
Yeah, so I do. I look at DA approvals and I look at what's going on from a council area and then from a specific, from a suburb level, because you might have a place like, say, Melton, okay, where there's a lot of development in Melton, Victoria. But of course, if you go to the inner fringe locations, it's already been built up. So then we start to look at those places, and if there's not much going on with DA approval and it's decreasing over a consecutive amount of years, then we're starting to say, okay, there is, of course, a lot of vacant land, but there's not enough properties getting built. And then I look at that all over. And there's a lot of areas that we invest in where it's all established areas that we buy in, but of course there's the outer fringe that have that.
Yep.
And we sometimes will stay away from that also. Sometimes we'll be buying in there because there's just not enough properties getting built.
Gotcha.
And a DA approval, we get it from the council. It's just give you the approval of when the property's been approved to get built.
Gotcha.
It can take another 12 to 18 months depending on if they go ahead with it. And sometimes they may not even go ahead with it.
Yep.
So
just a pipeline dream.
I do need to look at that. There's a risk there.
Yep.
And you'll see what will happen all the time. It's happening now in WA and a lot of other places around Queensland as well. There's parts of WA, if you look up like North Perth and all those like coastal towns that have all these new builds. We had a client, they bought 2 properties with us, and that was in 2022. Property's done fantastically well. We bought in Rockhampton and Gladstone. Property's nearly doubled. Okay. Then he was waiting at that time because he bought a off the plan property in WA. It just settled this year.
Gotcha.
Okay. And all these new properties that are coming onto all the new estates that are getting built, they're all coming onto the market now. So he bought it in 2022. 3 years later, the property's built. We all know what Perth and WA and places in Queensland have done. They've done extremely well. Now there's probably going to be an oversupply of property. And I've been watching some of these locations where you see building approvals reducing and then all of a sudden 2025, just massive spike up. And you see like 200-300 properties coming on. And that is normally the ripple effect of what you start to see in a market. You see a market do extremely well. What happens? Developers start getting into the market like, oh yeah, this is great. They're inexperienced. They don't know what's going on. They don't know about research. Start investing, pump all this money into it. Then there can be an oversupply of property, and then the market will start to slow down.
Gotcha.
Now, I'm putting my investing hat on. That's bad, so I don't want to be investing in
course.
in that area.
Oversupply.
But there's an oversupply, and property prices will slow down. Okay, but then again, it's good for the people that want to get into that market, live, buy their new home. It starts to slow down, and it becomes,
that's right,
I guess, not aggressive where prices are growing.
Yep.
But at the same time, if they had the supply from day one when the market was taking off because of migration, jobs, and all the things that were happening in WA and all these other locations I'm talking about, you probably wouldn't have that aggressive growth as well.
Yep.
So there's a lot to that too. There's a lot, not people understanding the market, of research side of things. People get following the herd. They buy into a market when it's doing so well and they want to develop, and it takes so long to develop. And then next thing you know, the market's slowed down. They've lost a lot of money. Builders can go into liquidation, or it can be because they go into liquidation because of bad management. It can go into liquidation because of materials have gone up and by 50% because of COVID.
Yep.
So that list goes on.
Yep. Okay, cool. I want to, and I'm talking specifically to the vast majority of the people that listen to this, which are investors, okay? So I want to just keep our investing hat on just as we kind of segue and finish up the podcast. What does an investor do listening to this? What does an investor do listen to this? Do we at the start of the podcast, I said, do we sell every one of our properties? Do we go into Bitcoin or go into stocks or go into a different asset class? Now, I've obviously been cheeky. We're not going to do that. But what does an investor look out for here? And I want tactical, if you've got tactical advice here when it comes to their research. Because like what you just mentioned right there, they're bought in an area where supply and demand is at a very, very, I mean, it's at an awesome level to then get into a market. But then by the time the property's built, the supply demand's outstripped, and now the supply is high. Demand's not as high, you're not going to get as much growth, right? Like that's one piece of the puzzle. I guess from an overall perspective, how can an investor take this information and go, cool?
Good question. Well, you need to establish the locations that are going to flourish. So I had a client came on board. We're buying a block of unit for him.
Mr. Sam?
Yeah, and he was freaking out because he goes, I'm looking at the metrics and it doesn't look too good, and days on market's quite high, and there's a lot of stock on the market. And I said, yeah, there is, but I go, we're buying in a market where we're predicting the future and we're getting there before the herd gets there. And so the idea of that is, as an investor, you're always looking in the future. You're not looking at what the market's doing now. And the people that do look what the market's doing now are the ones that are going to be investing in Queensland, WA and South Australia right now, and they're going to be losing a lot of money.
Yep. Or not losing, not gaining as much.
Not gaining as much, I'll say. And you might be losing money because the market will slow down. And if your market starts to plateau, your money's not growing. So you start to lose money because of inflation.
Gotcha.
So establishing those markets that are going to flourish, okay, and looking in the future, okay. And how do you do that? So I look at market cycles. Market cycles are very important.
Of course.
We need to understand where that market cycle is. If we have a look at Victoria, in parts of Victoria and parts of Tassie and parts of New South Wales, they haven't done well for the last 5 years, okay. There's certain parts that have, there's a lot of parts that haven't. You look at WA, Queensland, South Australia, always talk about those places, those last three places, they've done extremely well in the last 5 years. So you don't want to be looking in those markets. So you want to look at market cycles. Where is it heading? What has it done in the last 2, 3, 4 years?
Yep.
Some places have gone backwards. Some places are below COVID prices. Some places are at COVID prices still. And so that's one way to define, a location. Another one, we're talking about a lot of DA approvals, building approvals, or development approvals, looking at that, okay? Is there a reduction, and has there been a reduction? It's been trending in these areas. And so I look at a lot of locations that we invest in today, there's not enough properties getting built, and it's reducing and reducing and reducing. And so that's a great sign of seeing that. And then that gives you an understanding that, there's no supply that can just come on to the market today and affect the property market. Because we know if the approvals get approved today, that's great. It takes 12 to 18 months to build a property.
Yep.
Okay. And so
there's a lag period.
Okay. So that's another thing. I look at strong economies. Another one. You need to make sure the economy is strong, diverse. Don't want to buy in a small regional town or, place that's not diverse. And you need, of course, the next one will be high demand in property metrics. So I'm looking at property metrics showing us that demand is going to be there. So there's less and less properties coming on the market for sale.
Yep.
Vacancy rates are starting to drop. Days on market is starting to drop. Stock on market is starting to drop. When you start to see this reducing, it means there's demand there, and you start to see, things are starting to change in the market. So that there is very important. And then of course I look at the amount of money getting spent in the economy and what sort of jobs and how many jobs are getting created with the follow of internal migration, which is next. And
that's just more the research piece. I think the most important are the first two that you said, which is almost the opposite of how people think. It's like, and I've been saying this, right? One of the regions that we went and visited a couple of weeks back, last year had 5% growth, 3% growth, less than the Australian average.
Yeah,
right?
About
3% growth, right? People hear that and go, oh, wait. Why the fuck are you guys investing in a regions that did like less than half the Australian average growth rate last year? It's because all the other metrics line up. Now, it's a bit difficult. Sam, we'll talk about Sam. Sam, if you're watching this, we love you. Sam hasn't got that level of conviction, right? It's the first time he's working with us. We're going to build an awesome portfolio for him, right? He hasn't got that level of conviction because, he hasn't done this 500 times and hasn't been right every single time, right? He's bought, a few assets all in Melbourne because he lives in Melbourne and, they've followed the same trend and they've got in and maybe the property's done 30, 40, 50% growth already and then he's got into the market because that feels safe. It's very, very difficult to make a decision on a market when you don't have all the metrics and you've seen the region do 3%. Yet why is it so easy for us? Because, it's literally your full-time job and you've also got someone else doing that with you as well. You've got, a full-time job. You've obviously done it 500 times. Looking at a market where you've seen all the metrics, the days on market, the stock on market, the vacancy rate, all those metrics there, and you go 3% it's done last year, bang, that's the perfect time to go in. Almost opposite of how most people think, right? Very interesting. I think just to highlight that, to not go in like, when would we get out of a market? How much percentage growth would you, and I think we've mentioned this in podcasts before, what's the percentage growth? I know there's not a specific number.
There's not a specific number, but I think if you're in there, sometimes we're in there for nearly 1 to 2 years.
Yep.
Okay. And then we're kind of out of there. So some markets they are different to others. Some are a bit more passive in this nice consistent growth where it's like,
your wagga waggas
7-10% and it's continuing. Some are a bit more aggressive, like you look at Gladstone or Townsville, it's just bang aggressive and it's like 20-30% year on year. So if I take Townsville for example, 2021 to about 2023 we were investing there and we're out. We were 2024 we weren't buying there at all.
Yep.
And so that's when you don't want to keep buying there. At the moment, it's grown 27% Townsville in the last 12 months from today. So fantastic. That's awesome. But you've missed out on probably 30, 40, 50% there,
of course,
as well. So
yep.
I look around that 30 to 50%. Okay, if it's had that much growth, you probably want to steer away from it. But some markets will have that rally on where they can continue for that 5 to 7 years as well, where they have not strong or this passive growth as well,
yep.
where it's consistent. And sometimes it's more of a stable market and it's kind of like, it's not as aggressive, but it's at least it gives you confidence that you've got a market that just tricks along and does, 7, 8, 9, 10% year on year for the next 7 years.
Beats the Australian average. Awesome. Love it. Frank, we've touched on a lot. I think for the viewer as well, there's a few tactical things there that you guys can take away. My belief, based on what you've told me, I should not sell every asset and get into crypto. That's not what I should do.
Definitely not. You definitely don't want to be doing that.
Opposite.
Get into property.
So property's okay?
Property's okay still.
Okay.
It's always going to be okay. There'll be markets that won't do well and there's markets that will do well.
Okay. Well, lucky because I'm just about to buy another 3 or 4 properties. So there you go. Thank you again. We will see you I'll see you next week. To our viewer, we'll see you next week as well. Going to be bringing on maybe some special guests as we go along. Might be bringing on
very exciting.
Some more experience, or I won't say more experience, equally as experienced.
In different industries and different areas of business or in this field of, you could say.
Yeah, and I want you guys to meet some of our team members as well. So I think we're going to bring Austin on, who's head of operations, also the head of the commercial team as well, talking about commercial. So you guys can talk that. You guys can geek out on that. And then also bringing on head strategist, Mr. Anu, and talking about property there. We might also bring on some clients. If any of your clients want to come on and talk about your property experience and how you built your portfolio and how you kind of transition through, different assets and being fearful and whatnot, I'd love to personally sit down with clients. So expect an email. But thank you again. Great session. And I'll see you next week.
Awesome. Thanks, guys.